What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 16th of 2021. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's video, we're going to be diving straight into talking about a very important question that many of you in the community have asked me, and that is, Nick, where are we within the broader cryptocurrency cycle? A lot of people have been asking me the rational question at this point after making massive multiples on some positions, and that is, should I be taking profit? Should I be concerned about the market, or do we have more room to go? More room for speculation. We're going to be talking about all that and more throughout this video right after our quick sponsor. And our sponsor for today's episode is TaxBit. The 2020 tax season is here. Calculating taxes on cryptocurrency is complex and time consuming, but TaxBit has made it easy by automating the entire process. Link your exchanges and wallets to seamlessly pull your transactions through their tax engine and auto-generate your tax forms. Aside from automating taxes, TaxBit provides crypto enthusiasts real-time portfolio tracking and tax optimization visibility so that you can make tax optimization crypto trades throughout the year. If you're looking to stay IRS compliant, have real-time portfolio visibility, and save money on cryptocurrency taxes, then TaxBit is the platform for you. Check out the link down below in the description for more information. Alrighty, everyone. So I want to go ahead and dive into this today because it is a very important macro topic at hand when it comes to the altcoin cycle. And for those of you who are asking it, I have to say I'm extremely proud of you guys because sometimes people can get purely caught up in the euphoria and not ask those really pertinent questions. But we're going to go ahead and cut to the chase here, not ramble any longer. It's interesting that a lot of people ask this to me because the other day I just actually put out a tweet yesterday on my Twitter profile. You guys can follow me at Nicholas_Merton on there if you want. But generally speaking, I wanted to post a tweet kind of as a precursor to this discussion, talking about, where are we within the broader cycle? Is it time to be taking profits or be fearful? Because just the other day, back over the weekend, we had a little bit of a scare, a bit of a sell-off in the market where, to be fair, the total market capitalization, or more specifically altcoin market cap, both of which had taken a pretty broad hit here, and it cut down about 2 or 3 days worth of gains. So that can concern some people. Well, I want to go ahead and show you this one simple chart here. For those of you who are panicking from this down day of sell-off that we had, take a look at the long-term chart. So again, it cuts off here a little bit with my webcam here, guys, but you can generally see here that this chart demonstrates not on a daily time frame, not on an hourly or weekly time frame, but on a monthly time frame, the total to index, which is basically the total market capitalization or the total value of all altcoins. So in answering this question of whether or not we're at the peak of the altcoin cycle, it's best to look at this and look at the longer term time frame. Well, let's take a look at this chart here. Let's first observe history here. The previous altcoin cycle started off with formulating a base, nearly what could be seen as a double bottom here, where for multiple months we were able to hold at a consistent support level. Then after that, we started to send higher lows and higher highs, breaking above that previous resistance, having a breakout and a continuation of follow through over the course of 26 months. That was a massive return that led us all the way towards a total market cap of $500 billion. It was a great cycle, right? But let's take a look at what's happening this time around. From back here in December of 2018, where we hit rock bottom in the bear market, and here in March of 2020, more than a year later, when we had the scare of COVID, the global markets showcasing the liquidity crisis, we happen to hit a low right at that same range, doing exactly what we did back in the previous cycle. And now, we've been on a continuous uptrend since back in March as liquidity has circulated at a record pace into both crypto markets and traditional markets. And we've now just broken above that $500 billion, near $500 billion market. It was more around $470 billion, where in this case, altcoins have previously peaked, sitting at a valuation range in the upper $500 billion range at the moment. So let's take a look at history here. And I think many of you already got an idea of what the answer to my question is going to be of whether or not we're in the later stage of the altcoin cycle or if we've got more room to go. The equivalency of where we're at right now, where does it appear on this chart in this cycle? Where would we be in this phase of the cycle if we're equating to where we are here, right? I might be putting that in kind of a construed or weird way, but hopefully you get my point. I'll give you guys just a moment here. I think it's important to just give you guys some time to look at the chart and try to guess where we are from this previous cycle, right? Well, technically speaking, the total to market cap index unfortunately doesn't go all the way back to the previous highs of the last cycle. We don't have that to exactly work with. But generally speaking, we're an equivalent period of time here to around this range here, right? Just barely breaking above what would have been originally the all-time highs for market capitalization for both Bitcoin and altcoins in this case, specifically in altcoins. Altcoins hadn't really had a major cycle yet. And that's the really cool thing here, is that means at the end of the day, as you can see, there was a lot of follow through there. We are in the early stages here, by far, for altcoins in this cycle. Now, I know it can be very difficult for some people to grasp here that we could go towards a much higher level, and like we have marked here at around $5 trillion. It seems way too far out. Maybe the fundamentals don't seem like they're there. Maybe there's no rational reason in this case why altcoins should be valued at $5 trillion on any fundamental metric analysis. But that's the thing about markets, guys. Nothing has to be fundamental. I mean, what we've seen over the last couple of months in equities, what we've seen in crypto for multiple years now, even in a relatively short and new market, is that it's proven in this case overall, no matter how rational or irrational it might seem. Rationality is really subjective at the end of the day, for one. And two, it's important to note that valuations are determined by the price people are willing to pay for a certain coin or token and factoring in the circulating supply. It's as simple as that, right? So long as people are paying a higher price, there's capital inflows rather than an influx of capital outflows, valuations will continue to rise. And what we can utilize here is a general kind of understanding here of how cycles have played out previously and what kind of estimations we can have for the future. Now, I know a lot of you are thinking $5 trillion sounds like a lot, and it is the largest market capitalization gain, far outpacing what we had in this one. But it really matters about a percentage gain. And if you consider the target of what we had from the base to the peak in the last cycle, and over 1,304,195% return. This time around, we're asking in this case for nearly 1/100th of that. Basically a 13,501% gain from bottom to top. It's a fraction of what we've seen in the past. And this is again playing into the decaying returns that we expect, the expanding cycles that we've talked about. So again, that's the key thing to talk about here, guys. And if you want to dive into something more broad, which is the broader altcoin market cap, the broader cryptocurrency market cap, including both Bitcoin and altcoins, this is also a chart that we'll want to look at. Take a look at this linear line of growth on the logarithmic chart over the long term, considering the last two really major cycles here from back here in 2013, also as well here in 2017, and then also here going into 2021. We're still on the lower band of this linear line of basically ascending valuations on the logarithmic chart. We've still got a ways to go. And if you play into the mindset that we have of the expanding cycles, this could go somewhere into late 2021 or into as late as late 2022. This line here that I've drawn here alongside the dotted line, the linear line of ascending valuations here, you can see here overall that this demonstrates what we've seen in the past. The cycles, again, the flattening up here towards the new point of resistance here, the new expected highs in the market, which could be anywhere from a range of $7 trillion to $10 trillion for total market capitalization as we're factoring in both altcoins and Bitcoin. And outside of that as well, an eventual bear market where we're going to build a new level of support. Now, again, this is a very rough analysis of the chart here, but the key point I want to drive to you all here is that, again, to answer this question, simply put, we are far from the peak in this market. Now, I have no doubt there could possibly be a month or two like we had in the previous cycle where things might, go down for the month and we might have a silent month in this case. Oh, that stinks, right? We have to have a month where we're not making crazy gains. It's unfortunate, right? The punch bowl runs empty and then we got to wait for the party boy to fill in some more punch, right? Well, in this case, in the broader trend, if you guys are here for the next couple months, the next couple years, and you're not rushing anywhere, to another market that's going to perform better, which I really can't tell you of any out there that on an average month are going to go up 51% in valuation across the board. I can tell you the S&P 500 isn't even doing that in a single year. There's no other market like this. And it's good to keep in mind that longer term trend and be patient. A lot of people aren't. A lot of people are day trading, trying to catch every single opportunity, or they get tired of it because they lose a little bit of money because they're doing that and they go off to another market. This market pays. And it's really, really unfortunate to see people missing that point a lot of the time. Again, all in all here, guys, there's some key things that I want to hit on because, a lot of people have a hard time grasping how we're going to reach that $5 trillion market cap for altcoins, that, $7 to $10 trillion market capitalization for the total cryptocurrency market. How are we going to reach those valuation ranges? Well, it's actually quite simple. The buy orders, the buy side pressure is getting bigger, and we are seeing a major Bitcoin supply shortage. I can guarantee that to you because not only of the factoring of the halving event that I think a lot of people have already talked about by now, but outside of that, the real institutional demand that's coming in. We had two major stories here, not only of companies like Deutsche Bank in this case, which I think are trying to save itself and pivot towards a variety of other markets like crypto, has a very big set of ambitions for crypto custody and crypto services towards its clientele, both I would assume institutional and also for retail, starting off in its December 2020 World Economic Forum report. And outside of that, when we're talking directly about the buy side pressure here, right? Not just maybe providing buying services for clients and maybe retail and institutions that might set some demand. We know that there are a variety of companies like Morgan Stanley now that have over $150 billion, in this case just for Morgan Stanley, a $150 billion investment unit that is eyeing a direct position in Bitcoin. It's looking to actually build a substantial position in Bitcoin. So that $1.5 billion buy order that Tesla bought in this case for Bitcoin, taking cash from its balance sheet, about 7 to 8% at the time, and buying up Bitcoin, it's just the first step. And the really incredible thing that a lot of people didn't notice is that, in this case, Tesla kind of came after MicroStrategy. I mean, there's a few companies in between. MicroStrategy was the first big one. They came in with a multi-$100 million buy order, buying a ton of Bitcoin up. What you notice is that people are spending more and more cash and getting less and less Bitcoin along the way because the price is going up in such a vertical way. There's such a sense of FOMO in corporate, I was going to say corporate America, but the global corporate world in this case, to get exposure to Bitcoin and other digital assets eventually. Trust me, I can tell you guys in this case, whether it starts off as Ethereum or Litecoin or other assets, it's not just going to be Bitcoin. Bitcoin is definitely going to be the clear winner in this case for the first inflow of institutional capital. It's always been that first asset. And I think it will continue to be so as it's the most mainstream and well-known. And it does have that store value property due to its monetary policy that's programmed into the network. But again, this is why Bitcoin is continuing to recoup to these big even levels. It's being bought up at every dip. You can't be shaken out of the market, guys. Don't do it. Don't be shaken out. Keep that long-term vision in mind. And again, just going back to this chart here of either total market capitalization or to the tweet that we posted, whether you're asking about the altcoin cycle or investing in Bitcoin, guys, we've got a ways to go. We've still got a ways to go. In the case of the altcoin market, if it goes to 5 trillion, maybe even a little bit higher, maybe a 6 trillion, we're talking anywhere from around 8 to 10x in this case. Right? If we can go up to that range around 5 trillion to 6 trillion. And if you play in and out of the right place, if you learn how to take profits on some plays after they've had good run-ups and follow the trends of what the market is saying is trending at the time, if you do your due diligence, you can outpace those multiples. So it's very, very exciting, guys. Anyways, I've rambled on enough today. If you like this video, please consider dropping a like. And if you guys haven't already, again, please consider following me over on Twitter. It means a lot to me personally, at Nicholas_Merton. It's a great place where you guys can get some knowledge on some of the things that I'm putting out, not only here on the channel, but outside of that on my Twitter and just things that I'm covering in the market. If you like this video, please consider dropping a like. Consider subscribing and hitting the bell icon if you haven't already. And outside of that as well, one thing I did want to share with you all as well is for those of you out there who are actively trading, maybe if you're not day trading but swing trading in this case, I recommend you go check out the TaxBit newsletter. This is one of our sponsors here on the channel, and they put out a monthly newsletter. They just put one out for February talking about some tax optimization tools that they put out, as well as their expanding support for DeFi tools in this case. So I really recommend you go out and check out their blog in this case to learn a little bit more about the product, see what features they're adding. The guys like Austin on the team are constantly building and adding new features to TaxBit. And I think it's a really great tool if you're looking to do your taxes this season. But anyways, guys, that's it for the video. Thank you all so much for watching, and I'll see you all in the next video. Take care, everyone.